Hello and welcome to Pro Trader Strategies Market Commentary for Monday, April the 16th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please take a moment to read over this disclaimer. Basically, it says everything that I'm talking about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I don't know your risk parameters. I don't know what's in your portfolios, so I can't give you a recommendation on a particular stock or strategy because it could be counterintuitive to what you're already doing. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data. Guess what? It's a Monday. We don't usually get economic data on Monday, but we did today. Not super important, but pretty important for the overall economic picture across the pond. Not a whole lot to be seen there. But here in the United States, we got core retail sales coming in at 0.2%, expected to be 0.2%. And then retail sales came in at 0.6%, expected to be 0.4%. Now, keep in mind that core retail sales strips out some of the more volatile aspects of that number. The retail sales number is going to include automobiles, which is generally considered more volatile. Now, we've been seeing some of the U.S. Manufacturers of autos kind of struggling as of late. With this economic data point, it doesn't look like autos are really struggling across the board. All right, and then on to Empire State Manufacturing came in at 15.8, expected to be 19.8, and business inventories in line with expectations at 0.6%. Finally, we got the National Association of Home Builders Index, Housing Index. It's the NAHB, came in at 69, expected to be 71, and later on today we have Bostic speaking and long-term Treasury purchases coming out. All right, on to the overall markets. We've got crude oil coming off a little bit today, almost by about $1, bouncing off of this 38.2 Fibonacci level. We talked about that acting as a major resistance on the way up, should act as support on the way down now. Also, we still have this trend channel I've talked about. It's going to act as a buffer to the upside. Bulls really need to get up in that trend channel to really resume it. For the most part, we are seeing higher highs and higher lows, which is indication of a rally. So we might end up just drawing another trend channel along this line as well. So trying to draw something in there a little bit parallel to that one. Haven't done that yet as of right now, but crude oil finding support on the 38 Fibonacci as we would expect. All right, on to gold futures. Trying to struggle to move a little bit higher today. Equities are moving up as well, so this should cause a little bit of downward pressure with gold futures as the flight to quality is in effect. So, I would say that this upward pressure in gold really means that there's still a lot of bearishness in the overall equities out there with the turmoil in Syria and things of that nature. All of those levers and pulleys are really driving these markets, whether it's oil, gold, or the overall equity markets. So right now, kind of in flux right now with the crude oil and gold futures market because they're just really trying to discern whether or not there is still some panic in the air. Bitcoin futures coming off just a little bit today. Again, we talked about this. It really needs to get above this 23 Fibonacci level to make it break this little bit of bearishness that we're seeing with the lower lows and the lower highs. We need to break this high here in order to achieve that whole bearish rotation sentiment. So we need to get above that to get the bulls active again and back in the fight, I guess. VIX coming off into the 16 handle. Don't love to see that, but a lot, especially right now because last Friday I took off just about everything in my overall portfolio. It's pretty lean right now. Getting ready for earnings, so I'm not too upset about not having a whole lot on. Like we have Netflix tonight, big margin trade. So freeing up a lot of those monies for the earnings that are right around the corner. We're just starting to heat up with the overall banks. Netflix is another one as well. Johnson & Johnson, some of the staples. Anyway, We've got the Dow Jones Industrial Average up almost 200 points. Remember, we talked about all of this area right here is just a quagmire, not even a moat at this point. There's so many resistance and support levels coming in here that it's going to be a real drag on the overall market unless we just get one big pop to break free of that area. NASDAQ, pretty quiet day today, despite the fact that it is up 30. Last year, up 30 would have been a pretty big day, but up 30 today is just a breather. Then we've got the E-mini S&Ps again, struggling to get through this major 38 Fibonacci on the extensions, and it coincides with the regular Fibonacci retracements at the 61. So I've left those in there. All of this stuff kind of coinciding with one another is similar to what we were talking about those others. There's so many little support and resistance that everybody's using that is really causing this level to be quite a wide swath. Usually we can kind of pick it down to one or two different support resistance areas. With this one, there is just so much going on all at the same area. It's just like it's bouncing off the walls right now. All right, we can look at it on the 30-minute chart. These are 30-minute candles. On the daily sections, broken down into these little blue areas. It has the overnight and the day sessions in there. You can see overnight inventory opened up quite a bit higher. Overnight trade opened up quite a bit higher and then got short coming into today, flushing those guys out and then just trying to discern which way we want to go. Just not a whole lot of information out there in order to get us really moving in one direction or another. All right, MRK, I've been talking about this for days. Now I finally got out of it with this nice pop today. If you guys remember when it started consolidating down here, I thought this was going to be a major area to get through, the value area low, and then all of these little bottoms coming into the same area, which tells me, that signals, hey, there's some people coming in here and buying at these levels. That means they find a lot of value at this area, which means it's going to want to push up and away once the sellers kind of fall off to the wayside. Well, with this move today, I got the volatility coming out across the board. I also got the directional move. That helps out in both of these. Now, if you remember, in my IRA, I put this trade on one day earlier, and it cost me a full strike in my option. But let's talk about the IRA first. In my IRA, I went in there and sold the April. I sold the April 51 puts. Sold the 51 puts, bought the 45 puts to define that risk for 31 cents. And then I bought the 51 puts back today for 2 cents. In my margin account, remember I did the IRA on the April 4th. On the April 5th, I did the trade for my IRA. I just didn't have enough time, or from my IRA to my margin. On April 4th, I did my IRA. On April 5th, I did my margin account because I did it right at the end of the day in my IRA. Didn't have enough time to get it off in my margin account, and that cost me a full strike because in my IRA, I did the 51 puts. In my margin account, I did the 52 puts that I sold for 37 cents. So they were basically priced at around the same, but one day later, that's how much that cost me. I covered the IRA, only covered the 51 puts, like I said, for 2 cents. In my margin account, I covered the 52 puts for 5 cents. So sold the margin for 37, bought them for 5, sold the spread in my IRA, and just bought back the 51 puts for a couple of pennies. So both nice trades there. On to a couple of things that I'm going to be looking at is Netflix later on today. As you can see, after the close, we have Netflix, and then we have Johnson & Johnson and Goldman Sachs. I'm going to be playing Johnson & Johnson probably to the upside. Excuse me, but definitely Netflix and Goldman Sachs are going to be played to the upside. Really on the fence about Johnson & Johnson. Everything's going to come down to what I can get for premium and everything else. As you can see, pretty high implied volatility across the board for the trades that I'm looking at for today, well into the 90s, which is way higher than what we've seen for at least the last year. So I'm going to be playing those today. Check it out at ProTraderStrategies.com. Friday's webinar is going to be a good one. Everybody showed up in hordes for the poor man's covered call. This is the flip side of that. In this poor man's covered put is brilliant because there's so many benefits to being able to short a stock when you're bearish in it, and you don't have to go out there and borrow it and pay all these different fees that go into shorting a stock. We can do this synthetically with options, and we don't have to go through all those loops and the rigmarole to be able to short a stock. I'm going to show you how to set that up in Friday's webinar, so check it out. It's a really good one, very important for anybody to really want to hedge an overall portfolio, because most portfolios are directionally to the upside. This is going to be a great way to add a lot of negative deltas to an overall portfolio and be able to capitalize on a stock going down. So I'll show you how to do all that in Friday's webinar. All right. So if you can't take that, take it easy.